All right. Welcome to today's macro outlook for the new month. I think this is our first macro outlook for the month of June. Yes. So this covers for 1st to 5th of June 2026. And I'll be running through what we have for the week based off from um the macroeconomic perspective, and of course, the fundamental at large from in the market. So we're going to look at, as usual, we're going to look from the USD perspective, and we'll try to, marry it into um, Euro USD and Pound USD. So basically, this video is more or less to give you guys an idea of what the market is, reading on for the week and how we can take advantage or build value around it. So I don't tend to make this video very long, and we'll see what we can do for today. So welcome officially. So this is the week of 1st to 5th of June 2026. This video is valid for this recording is valid within this period of time. And this is published on Sunday, 31st of May, 2026. So let's look at the regime. Like, for every time we come on here, there are three major things we want to, demystify. And one of them is the regime. Try to look at the regime, and we'll try to look at the primary driver of the week, and we'll look at the risk. Okay, the key risk, that could mitigate what we expect, or that could serve as a shock, to our outlook. I've explained what regime means. I've explained what primary driver means. I've explained what key risk means on our previous video. So please do well to go and watch that video. It will help you to understand how we look at the market from the macro lens every week. So I guess that clarifies that. So let's look at, this is 10 slides. So I'll try as well to run through the 10 slide. So here, the second slide wants to look at the week in context. What exactly is happening from previous week to the new week? You need to understand that, because macro, we're not trading. One thing you need to understand, but when you're building macro lens, is that we're not looking at the market from headlines. We're trying to take from where it is coming from and perhaps where it could go. So our week in context touches on that foundation. Okay, so if you look at our week in context, you will see that we have what happened in early May. Okay, you can see we have hot CPI, alt PPI, rising Fed hike narrative. That was what the market was seeing in early May, and that's why you could see in early May we saw Euro USD and Pound USD sold off. They sold off aggressively. But what happened in mid May? We saw hawkish FOMC minutes. We saw Fed Warsh Fed transition, meaning we saw that Fed was coming on board. We saw higher for longer repricing too in mid-May. But then in late May, which was the ending of the May, the Iran peace talk started coming into the market. Then oil collapsed a little bit. Yield compressed. Softer USD started coming in during late May. So this is, if you look at it holistically, you can see how the week transitioned from early May to late May, based off from the fundamental perspective, based off from the fundamental data and geopolitical reasoning that was happening in the market. So let's look at something quite interesting that we built for for you guys about something called competitive narrative entering June, because this is our first what's it called? Our first macro outlook for the first week of June. And so it's very important. Whatever happened first week has a way to spread into the other weeks for the month. So let's look at what happened, competitive narrative entering June. What should we expect if USD to stay bullish? First is inflation need to stay elevated. We'll have to see the higher for longer Fed narrative still holding tight. We need to see what Kevin Warsh, which happens to be the new Federal Reserve chairman. We need to see labor still resilient enough to prove that interest rate can still stay higher for a longer period of time for us to have a bullish USD narrative all through the month of June. Okay, what will happen if the market stays, if we should see a bearish USD in the month of June? Then oil has to collapse. We'll see oil prices coming down bit by bit. We could see growth slowing. We could see yield compressing lower. Then we could see the geopolitical premium fading away. Yes, if we see the geopolitical tension fading away, then if we see any of this, we could say, okay, the USD should start pricing lower, or it should weaken a bit. Of course, we have this particular one, which stands very strong this week, which happens to be the NFP for Friday. Yes, we're going to get the labor market report from this week. Yeah, we're going to get the labor market report from this week from BLS, and that would also give us a view of how the labor market, the US labor market, is faring, and we'll take a lens with the data into the bond market. So if we get that data, it gives us a view to be one of our classic data for the month of June, to see how the labor markets are faring, and what can we extract from that data into the current macro regime. So that is that for the second slide. Let's go into the third slide quickly. Yes, the third slide stays on what exactly is happening from the weekly alignment plus positioning to monthly to weekly continuity and crowding risk. So you can see we're looking at this perspective on this slide, particularly from the weekly regime alignment. You need to understand where the market is coming into and how we can build something into it. So we're looking at stuff that's ongoing and what we could do about it coming through. First, the weekly regime alignment has to start from the monthly regime. So this is more like a top-down macro analysis, just the way you have a technical analysis, top-down analysis. So we need to see from the monthly regime, what are we seeing? Yes, clearly from the monthly regime, we have inflation persistent with growth friction. So what does that mean? We're seeing inflation staying elevated. However, growth is slowing. From the current growth reports we had, we're seeing that growth is slowing down a bit, but inflation is still elevated, not too high, but quite away from Fed targets. And what should we look to further validate the monthly regime is NFP test the labor leg of the regime. So want to see if the labor market is still resilient enough to carry on the higher for longer narrative, or is weak to reprise that, the higher for longer narrative might just be a mere noise, or perhaps the market will reprice it a little bit lower, or probably reprice much higher, depending on the data we're getting on Friday this week. So we need to also look at the weekly alignment. What's the weekly alignment saying? This week is going to be this week is going to be about confirmation week. Why? Because the labor market constitutes the major probability we used in measuring through the health of any economy we're looking at. So the US labor market, we saw the confirmation week into what the monthly regime is actually saying. So NFP Friday validates or challenges higher for longer narrative. Like I said before, is very simple. It's very straightforward. Then market pricing is going to price two things: delayed cuts, not imminent to hike, right? Market is currently pricing delayed cuts, not imminent to hike, meaning that the market is looking at, oh, we're not going to cut aggressively, we're not going to cut very soon. However, we're also not going to hike, very soon. So it is on the middle road. It is on the middle road right now. That's what the market is pricing at the moment. So that's why you see largely the market is currently ranging and all of that. So the implication is classic higher for longer positioning, no directional conviction at the moment. Yes, we don't have a directional conviction where the market will go at the moment, because some narratives are not currently giving that headway to tell the central banks where to go at the moment, or perhaps tell the market what to price, at the moment. So what must happen to really give us that conviction, for market to pick a track, for the market to pick a direction? One, NFP remains resilient, right? NFP remains resilient. So, however, if NFP does not remain resilient, then we could have weak print shift. So if the NFP prints weak, and if weak print shift June from inflation persistence to growth slowdown. So if we see a weak print from NFP, that could trigger a direction for the markets. So positioning and sentiment. Well, this week on USD, we're staying neutral, right? We're staying neutral. Implication is that we're waiting for NFP to tell us what to do, right? But of course, the market will be moving all through Monday, Tuesday, Wednesday to get to NFP days, all right? But just for a confirmation. For Euro, we're seeing moderately long. Yeah, we're seeing moderately long. Vulnerable if NFP beats and yield rises and blah, blah, blah. We want to see what is US 2-year doing, stabilizing, right? Yeah, US 2-year is stabilizing, trying to find whether to price higher or price lower. So NFP or any form of geopolitical escalation can also do this. Give us then oil is heavy long liquidation, it's inflation support, continued weakness, compress inflation expectation. So if oil keeps dropping, it tells us that inflation expectation we are thinking should come into the market will slowly drop. So this is what we have on our weekly regime alignment and positioning. Very, very important data out there. I hope you go look at it and see how you could make use of it. Then we have our event calendar. So what we have for the week that could drive the market for events that could, bring in volatility for the week. Of course, the major guy for the week stands out as the NFP. Yeah, we'll have the major guy stand out as the NFP on Friday. Is a defining moment for the week. However, we'll have other tier one events for the week. One is ICM manufacturing. We have Euros, which happens on Monday, 10 a.m. Eastern time. We're looking at how that data could, bring in volatility in the market on Monday, New York time. We have the Eurozone CPI flash, very important data. Yeah, this Eurozone important data is very, very important. If inflation stay elevated, continues to stay elevated, then the ECB hike narrative might come into the markets. If you've gone through the monthly reports, you'll see us highlight that ECB might be on the verge to talk about hiking of rate, depending how inflation data is actually printing. I don't think we have ADP this week. Do we? I don't think we have ADP, but it's been captured here. Yeah, we have ADP. You will have ICM services PMI on Wednesday. Then we'll have our batch book on Wednesday. Then we'll have our US Non Farm Payroll on Friday. So these are these are actually the weekly events we have for the week. And of course, you could always read up why it matters. For us in MacroLabFX, we don't just capture weekly events. We'll give context to that weekly events, and that is why our reports, our outlook is very, very, very unique. So I hope this gives you a clear stand and what to expect as you go. All right, so let's dive into our focus point 1 and focus point 2, right? Here, we just want to see what the market is doing from focus point 1 to focus point 2 and how this could help you to read through the market, okay? The labor market is what we're going to focus on to this week. I want to see the oil narrative as well. Okay, the labor market now matters more than inflation this week. Of course, the market want to see what the labor market is in to do. Our focus point 2 has to do with oil. Yes, because oil plays a role on the inflation narrative, majorly for this current regime, energy shock and all of that. We could see that pricing into the market. And let's look at this table. It's a very interesting data that we captured on this table. You could see previous oil chain. We could see that oil was rising, inflation was rising, yield was rising, USD was rising, both pairs declining, which is EURUSD and pound USD was declining. Yeah. But now the new oil chain we're seeing is oil collapsing on Iran peace narrative, right? Inflation fears is falling. The market is no longer having that huge optimistic in terms of inflation and what they see through the data. So we could just take it from that perspective and see what we could do in that regard. And of course, if you look at it clearly, you will see that the yield also, the bond market is also compressing. At least I think sometime last week it rose up to 4.7, near up to 4.9, yeah. But now it's currently at 4.0. So that's a huge decline. Okay, that's about 10 basis point decline. Yeah, that's what it is. So USD is weakening as well. We have both pairs, EURUSD and pound USD, of course, recovering. So the critical test for us is the oil-driven disinflation permanent or temporary? If Iran negotiation or the disinflation effect continues, we'll see what the Iran talk with US agreement deal looks like during coming into June. We use that to also validate our inflation narrative. Okay, that's what we have on this. Let's see. Our focus point 3 is yield reaction, and of course we want to see the ECB hiking narrative. We need pricing this week with the Tuesday Euro CPI data gives a clue that the European Central Bank should head on into hiking narrative, or with the data gives us a view that the hike narrative will be on hold while we'll still watch on incoming data. So that's what we captured on this particular slide, which is very important information I want you guys to listen to and understand. So we have our yield reaction matrix here, which is very important. And we also have our ECB becoming increasingly important. So the European Central Bank becomes a very notable narrative into June, all right? As we go into June macro and other data, ECB becomes a point of interest. And ECB is becoming increasingly important. And let's say that the ECB factor, want to see the Eurozone CPI flash, hot print confirms June hike, then we could see Euro gains independent support regardless of NFP Friday outcome. Then ECB June hike at 50% probability. Yeah, if we see that data coming in should support ECB hawkish narrative, then we'll start pricing for a higher price for Euro USD. ECB versus BOE divergence. This is a very key thing. Yeah, Euro USD always better than pound USD if yields rise. This is the key relative pair divergence trade for June. Yeah, this month we're going to keenly try to separate Euro USD and pound USD in terms of correlation because there's some sort of policy divergence coming in from ECB and Bank of England, even down to Federal Reserve. So we're going to look at that narrative a little bit as we go into June. So let's look at what we should expect from the bond market this week. A strong NFP and firm wages will push the 2-year yield higher, and that will give us a bullish USD, a bearish USD, and a bearish Euro USD, and a bearish pound USD. So if we have in line near forecast, it will be stable. We'll have a neutral USD. The market will range all through. A weak NFP, where the yield will price lower. We'll have a bearish USD. We'll have a bullish Euro USD and a bullish pound USD. Yeah, we'll see batch book give us a clue of what the Fed and we should go into. Not really too interested on batch book really, but let's look at Eurozone CPI on Tuesday. I think Tuesday will be very interesting. Yeah, it'll be an interesting day in the market because that will be the first flash CPI data ahead of ECB meeting. I think on 14th or thereabout. Can't remember the exact date at the moment. Catch up on that on our monthly outlook. To give the euro will be supported, neutral to mild bullish. This will be bullish and this will be neutral, and that's what we have on particularly on this slide. Okay, so let's look at what we have for our pair outlook. Oh, we have our pair outlook for Euro USD and pound USD. So look at Euro USD. Euro USD going into the week. Yeah, we're neutral. Okay, we're neutral on Euro USD. We need to see data confirm where we're going at or where we should go to or what should we look out for on Euro USD. We're quite neutral, very neutral on Euro USD. This is our macro setup for the week, supported by falling oil, softer USD, ECB tightening expectation, Eurozone CPI flash Tuesday provide an independent Euro catalyst, not dependent on NFP, if odds, Euro rallies, blah, blah, blah. All right, so we're looking at those kind of supported buyers. And these are resistance level, these are pivot level, and these are support on, and we're largely neutral on Euro USD. Why we're going to take position from focus point 1, focus point 2, focus point 3. As data comes in, we'll begin to take decisions. That is why you need to understand the macro backdrop as the week opens, right? And we have for pound USD. Pound USD we're a little bit bearish on pound USD compared to Euro USD. All right, we're a little bit bearish on pound USD compared to. As things changes, right? We're reaching the downside. These are key orientation level for pound USD, right? And we're looking at fundamentally weaker than Euro. UK level deteriorating, blah, blah, blah. So we just have to capture this data just to ensure that we pass the correct message and give a body outlook to what is happening in the market. So that being said, let's look at the key risk, right? Let's look at the key risk. Key risk is very important. Key risk is one of the most important data, one of the most important outlook we pay attention to. Our primary risk this week is labor much stronger than expected, NFP beat materially. So if labor becomes strong, NFP on Friday becomes too strong or keen supported, then it's going to upturn so many things in the market. Okay. Secondary is the Iran peace talk with the US. So if the peace talk takes shape, then we expect oil to price lower, and we expect Euro USD to pound USD to recover higher. If the peace talk do not take good shape this week, what it will do is that it will bring back the inflation narrative into the market, and that will keep oil supported. That will keep the yield supported, and of course, Euro USD and pound USD will be priced higher. Our tail risk is geopolitical escalation. We don't know. We don't really see this, but anything can happen. If the tension escalates again, then the market will go full-blown inflation narrative, and of course keeps the higher for longer narrative further. But as a tail risk, it's likely not to happen. So this is our one-line summary, very important. June 1 to 1st is labor validation week, where non-farm payroll will determine whether persistent inflation or restrictive Warsh Fed continues supporting USD, or whether slowing growth begins to dominate the macro narrative. So basically, this is what we'll have from a macro perspective this week. So I hope this video does well for you, and you happen to get the best of it. Guys, see the next video where we'll break down the technical analysis perspective, of this report, and we hope this gives you a better idea of what the markets will do, or how you prepare yourself from the macro perspective. So guys, see you in the next